Welcome back, Bruce. What's on the docket, my friend? Happy New Year to you. I know it's a little
Happy
later,
New
but
Year.
yeah, how's it
Greetings to
going?
everybody. Good program so far. I just want to keep listening.
Yeah, well,
So,
that's what we do. We bat the ball around and
yeah.
uh, you know, uh, we guess well
And often.
at times. Oh, oh yeah. Do you remember Bruce? It must have been 30 years ago when it used to be FNN and this brokerage firm was advertising on there. And it was a takeoff on the Unknown Comic. Remember that? The guy would wear a paper bag over his head on the
Right,
Gong
right.
Show. All right. So they had a
Wow.
bank of phones and a guy with a bag over his head, like the no comic. And the phones would ring and he'd go, sounds good, let's do it. Sounds good, let's do it. Sounds good, let's do it. So anyway, you know, how many brokers try and talk you out of them making money on to do a commission?
Oh my
Um,
gosh. We
yeah.
well, Dale and I go way back. We're a couple of old Dean Witter guys, and
Oh my
so
God. Yeah. Dean
and
Witter and
so
they were
yeah,
in what department store were they in again? Sears?
it's let's see, shocks, socks, and stocks.
They did used to have branches inside of
Yeah,
Sears, I believe.
yes, they did. Yep.
Okay.
So
Anyway, that's dinosaur.
it is,
That's
but
one.
we were there at the same time, and
Yeah.
now nobody even knows what Dean Witter is, but it was a venerable old firm, and it's
Yeah.
so great to hang out with Dale and with you all, and so thank you so much for having me.
Okay,
So
buddies.
so I'm old school, so just
Yeah.
let's just keep that. So what I
All right.
thought we could do in the little bit of time that we have is it's a little bit of review, but it's with the idea of looking ahead at 2025 and
Like it.
just sort of you know uh, guessing, long term guessing. So we
Yeah.
we can have a look and see what might be in store for us in the year ahead.
Cool.
If you want to just a disclaimer here that I am guessing, in fact, and that the WyckoffAnalytix.com is a great place to go to get a lot of free content on Wyckoff. There's some great work in there. Go to the Hank Pruden. He was my mentor, my dear friend. I taught with him for 30 years at Golden Gate University, Wyckoff, and other things. But anyway, his very last presentation that he gave is recorded and on there, and it's a must watch for anybody that wants to learn more about Wyckoff.
Has left a nice legacy for
Oh my
people.
gosh, yeah.
You
So
know, we do that if we teach people, and all you ever hear is about all the failures in the business, right? 90%
yeah,
lose within 90 days, their account's gone, but you don't hear about small retail guys that worked hard and came up with a method and do quite well in the markets and
so many.
by
I
having
taught
that skill, you
I
know?
would say that I taught thousands of people technical analysis over the 30 years that I was at Golden Gate. Hugely popular program.
Yeah.
So many people have become disciplined, have a good system, have a methodology. They're psychologically in the right place, and they just keep turning the crank and grinding it out. And they've been doing it for decades, and it
It's
absolutely is doable. And
you know what they say, Bruce, a good coach can change the game. A great coach can change a life.
no question, absolutely true.
Are you going
And
to start crying now?
well,
It is
I am
pretty
crying.
touching.
I am crying.
I am.
So,
Let me get a tissue here. All right, go ahead, Bruce.
and that's why we call you coach.
All
And
right. Anyway.
so, anyway, this is a election year seasonality. So this is last
Uh,
year, and we put
uh,
this up last year and showed it right here among our friends here. And basically, what this is I go back and I take as far back as we have data, and I look at just the election years for the S&P 500 and look at the annual seasonality of all the election years. And in
I remember that.
2023, it worked really well. 24, it worked well. It had a
They had
family
a bear raid.
resemblance.
We had that Fed bear raid in December. That one big
Yeah,
down day.
yes, and other than that, it's just generally given us the right direction. The peaks and troughs, maybe a little bit off, but still, it worked. It worked well. And if anything, the market was a little bit stronger than the seasonality. So what I want to do, Dale, is I want to do the post-election year seasonality, so that
Okay.
we can see, give us kind of a roadmap for what could be in store for us in the year ahead, 2025. And I like to think in quarters of a year. I think everything happens there because this is just the way that institutions think. They think in quarters. And so we can see here that, well, going back, you can see that the end of the year was quite strong post election.
Right.
And if
Right.
anything, it was stronger. And I think it was in anticipation of a pro economy, pro investment administration coming in. And so there was a lot of good positive energy for that. And it helped to take out this weakness here in October. Well, now we look ahead at the year, and we can see that the first quarter here is basically flat. Kind of makes
Yeah.
sense, and I'll show you why in a minute. But and of course, we don't know whether or not there's going to be a downward bias or a little bit of an upward bias to this, but that generally the market is going to be just more or less range bound, marking time, and that the action really starts in the middle part of the year. And
Bruce,
and
Bruce,
yeah,
are you
yep, yep.
connected with those people, the Foundation of Cycles people? Do you know who they
Ye-
are?
yes, I do. I know some of the people on the board,
Okay.
and I don't. Uh, I,
I know
I'm
you're
not
not
an
a cycle
active
guy.
member of it, but I
Yeah.
am very
Well, I bring it
friendly
up
with them.
because they're looking, a lot of their cycles line up for a high at the end of this month,
Okay.
within a
Well,
week, and then
there you go.
down into March,
Okay,
like your
there you go.
model,
Mm-hmm.
and then a rally, and then a final low in May. So, but the beginning of their cycle forecast lines up perfectly with the seasonality in February.
There you go. And so we're tape readers. Wyckoffans are tape readers. So I'm going to make also a case in the charts for why I think this could very well play out like this.
Okay.
So, but keep this in mind as a possible roadmap for the year ahead. Now,
Take a
let me,
screenshot, everyone.
yeah,
Okay,
go
too
ahead,
late.
grab a screenshot,
Go ahead.
and so now here, this is interesting. I've been looking at this data, this decennial data for, gosh, I don't know, 30, 40 years. And this is just summing up all of the years of the decade, ending in its year one, two, three, etc. And
Wow.
Dale, it's scary how well this has worked in this decade. And we had a low that came in the 2022. We had a bear market which really started at the end of 21, but the internals started to break much earlier. But we had a bear into 22. Then the bull started. We spent the first part of it running
Yeah.
up through resistance, and you got to take out the COVID year. It was a little bit of a mess, but then
Yeah.
up and out. And I've actually taken the market and laid it over this. I don't have that slide with me today, but here's a schematic, a Wyckoff schematic that Blake was referring to. And
Yeah.
you can see the schematic and how there's just really a family resemblance here. And I even put the labeling for this is Wyckoff labeling, and go to Wyckoff Analytix to learn more about that. But you can see up and out, backs up. We call these last points of support, which are important pullbacks in the uptrend, and then the big markup. And we certainly are in a big markup and we're in a bull market. Now look at the 5th year. This is the part that I just want to,
Yeah, it goes parabolic.
and so you can see here that the 5th year is long and strong and totally fits with what happens after you finish accumulation, is that you get a really good markup. This markup goes and it goes and it goes. Now, does it have to happen exactly like this? No. As a matter of fact, it wouldn't surprise me if we didn't have something akin to what we saw in the seasonality. But keep this in mind, because we do have a market that is just keeps making new highs and showing good strength. And so I'll show some point and figure here in a sec. So anyway, capture that. This
Yeah,
is data is 1897 to 2020.
a lot of
So
history.
a lot of history. Okay. So now getting into some charts. Now, nobody panic over all this. These are our Wyckoff labeling, and this is the way that I keep notes in the market. But I'm using this chart really to show the uptrend and the effects of the quarter end on the market. And these institutions, I think they're kind of crazy actually. But here's the quarter and year ends, and you can see how they just they just drive the market up right into the ends of quarters, and and you can see here just as look what happened in 2021. They push the market up, 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 make a high right at the end of the year. That is the final high before the bear starts. And so these institutions are window dressing their
Yeah,
portfolios, and the institutions are the only ones that have the buying power to do this. And we know that the S&P is dominated by the Mag 7 type stocks, the growth stocks. Well, look what happened here. We have really a climactic surge of the S&P 500 that occurs in the final quarter of the year into December,
right.
and it actually peaks out a little bit before. But I have a rule of thumb, and that is that quarter end tops can come anywhere from 2 to 3 weeks before the end of the quarter, which is the green line,
Or after.
or 2 to 3 weeks after. So it's a window, and often you get a test where you get the first high before and the test of the high after. And it's exactly what we seem to be having here. And do note this pink dotted line. And this is a reverse. We call this in Wyckoff reverse use of trend lines. We draw them on adjacent peaks right here
Yeah,
and here. And look what it's done. It threw over the
yeah.
top of that, overbought, and then it fell back below it. And now
Love
it's
that
rallying
work.
up
Testing it.
under,
Yeah,
testing it.
yeah.
So I whenever you get a big break in the market, like you did say here, buying climax automatic reaction, whenever you get that kind of an action, the automatically as Wyckofians, we want to think range bound. That even if it's an uptrend, it could go into a big trading range and have to spend time rebuilding cause. And so that
Yeah.
is what I'm thinking here.
58 to 6100 range. It's going to play around in for a while, or
I
it's
think that's a very good
okay.
likelihood. Now,
Okay.
here's a couple of old school charts, but this is the same chart we just looked at. So this more of the labeling work done. I haven't yet done the labeling on this, but I will. But these are kind of my internal notes. But down here, note this is the New York Stock Exchange stocks above their 50-day moving average. It's a breadth indicator.
Right.
One stock, one vote. It's not dominated by market cap or anything. And
Got it.
when you get, and my basically the way I use it is overbought, let's say oversold, and then it starts to turn up It's got northward directionality. You want to trade that in the market. Market's going up in concert with that. Go with it. If it's overbought and turning down, you look for weakness in the market and you trade with that. Here, look what happened as we culminated the fourth quarter. So it just kept making lower highs and lower highs. And look at this high right here in mid-November, late November. Look at how low it is.
What a divergence.
Big divergence, a big one,
Yeah,
Dale.
yeah,
And
huge.
this is a throw over, which means that the stocks that are driving the market through this trend channel are the Mag 7 style mega caps.
Yeah,
And everything else is waning.
yeah.
And so this says to me that, again, further argument for best cases we're range bound. And this is the trend channel. We're way overbought here.
Yeah,
Top of the
maybe
channel.
yeah.
Yeah.
Could we go to, you have a red, what's the red line? A moving average? Yeah.
Yeah, that's a
Uh,
50-day. That's the
okay.
200-day. Sorry.
A 200, that's what, 5,600 round numbers?
Yes, 50,
Okay.
exactly.
And then your trend line comes in around 53.
Yeah.
And they,
So,
okay.
no, go ahead.
Because I see on your POF that you have those ranges there, 53 and a half. You have
Yes.
ranges
So
on top and ranges on the bottom.
now I've shown this chart before. Now, this is the same chart we have over here. I'm just blowing it up a little bit, but this chart is the accumulation structure. And
Right.
this is an old technique. A point figure is is really like the oldest charting method there is. They were, you know, trading commodities in the 14 and 1500s with point figure charts. And
Oh, wow.
there's a technique you can use which is very Wyckoffian, which is horizontal point figure counting. And from that, you can estimate objectives. Now,
Right.
I posted this chart up, and I've shown it here before in January of 23.
Yeah.
And I put this up. I wrote a blog at Stock Charts on it, and then also put it in my show. And people thought I was absolutely certifiable. But
Oh,
at the
yeah, with
beginning
the
of every bull
targets.
market,
Yeah.
we do these counts, and they're scary good. And so this count, which we took it at we call this the count line, 3775 on the S&P, and we extended this whole base here. It counts up as high as 6275, 6550. And so from this count line of 3775, and at the time everybody was bearish and cautious, and we're saying, hey, this is we're completing a base for a big bull run. And so here, this is the same data. I just use a slightly different uh, scaling. And you can see, and then I brought it up to date. This is through the 21st. And so now this box is at, we've actually hit 6,100 on this box. And we have a count 6,350, 6,700. But we may have to build a cause here to run this up to that level. And I do absolutely believe it's possible, especially with the 5th-year seasonality in the decennial, that we
Well,
could eventually get there.
yeah, I know some people talking in the 7,000 handles. And I think you had numbers like that last time we talked.
Well,
That,
we could actually make this count bigger. I
yeah,
tend to be conservative and then I
right,
extend them once we hit objectives.
right.
And I do think that 7,000 is possible.
Yeah.
But it's when it's down here at 3,800 that you want to have you want to be looking at a potential for 7,000, not when it
Right.
gets to 6,100, right?
Yeah.
I'm seeing a lot of that now, but people are very, I think speculators are very bullish right now, and that this needs to be tamped down. Um, so here's the Nasdaq. Sorry, here's the Nasdaq. Now notice the NASDAQ in its bull run, which has been exceptional. Here's the big accumulation structure, 22, 23. But look
Yeah.
what it's doing, Dale. It's just hugging along this
Yeah.
lower demand trend line. And it's
Yeah. Look at
barely keeping its head above.
yeah, and look at your divergences, what on the indicators that you have underneath.
So and the I put two here. This is just the NASDAQ 100 stocks, and
Right.
this is the NASDAQ comp, which is all the NASDAQ stocks. They both
Okay.
have a very similar family resemblance.
They do.
So very reason for caution. That's all. And
Okay.
also this green box here is what I think the range bound market could very well be. So if we start to break back below this high of July, this could be the trading range bounded here in this area.
Okay.
Okay, I probably have a couple
Nice.
more minutes.
No, it's all right. Yeah, go ahead.
Okay, so this is the point and figure on the NASDAQ for the bull market, but we can see that it looks, even though people are very bullish on the NASDAQ stocks and the megas, that we can see that it's very much hugging the bottom of this trend channel. It's not overbought like the S&P is. But the other part is, if we go down here to the point figure, we can see that this count in the
We achieved
22,
part of it. Didn't we get to 22? No, not
we're
quite.
there. We're
Oh, we
there.
did get to
Yeah.
22. Yeah,
Yeah. So now could we get to 2320? Absolutely.
sure.
But we
Yeah,
could blow up there to that.
yeah.
But look at how we're starting to struggle.
Mhm.
It's starting to labor up here. And so I would just be very cognizant of this. If we get to 23,200 NASDAQ, we very well could hit that 6350 level in the S&P. And then they
Right.
would both be fulfilling count objectives. And that would be something to really pay very close attention to. So
An Another great presentation by Bruce Fraser. And
okay.
yeah,
You're
really,
too kind.
and really nice stuff. Oh, there's the mags.
Yeah, so
Um,
here's just the mags, but there's all this excitement about the mags, but
yeah, they're
look at
not performing.
the ETF.
Well,
So here,
look at Apple. Bruce, let me ask you something.
sure.
Is Apple the tree that fell in the forest that no one can hear?
Yeah.
The and
Yes.
it and it's a redwood. It's a big tree.
And you know what? Everybody owns Apple, and I can't tell you how many phone calls I've gotten
Yeah.
in recent days regarding Apple's recent slide off of.
Is you've been around for a while. Is it a harbinger or just an aberration?
Um, I think it's a. I oh well. All right. Let's go back to old school. Um,
Okay.
so first of all, this is often referred to. Look at these peaks.
Yeah.
And so you can see these peaks. It
Yeah.
jumps up through these highs
Yeah.
and then it fails. And in
Yeah.
Wyckoff, this would be characterized as a very special kind of a distribution pattern called an upthrust after distribution. So distribution forms maybe as early as July. So
Right.
all of this has been distributional, and then it throws over the top of this one last time and then fails. And
Yeah.
so it may very well find support around here and rally up to these
Yeah. It could
levels
rally
again.
to 240. Would be his. Yeah.
Exactly. But this happens a lot. Is the upthrust after distribution,
Yeah.
and it's very disconcerting that it's gone to new highs and then came back, and without really very
Yeah.
little effort has taken this old resistance, new support, and it didn't provide support.
20%.
Uh,
All right.
and
So you didn't answer my question. Is this,
oh,
look at this chart, cover up the title. Could this be what ends up happening in the market?
I would be very concerned about that because remember the old saying. I mean, that the old saying is beware when the generals march alone, and that's an
Okay,
old Wall Street term.
it is.
And in the old days, it was the generals were the blue chips. So
Yeah,
they were General Motors, General Mills, General Electric, General Re, General. And so all of these stocks were the big blue chip names. And when they were walking uphill by themselves, watch out because the generals were marching and the troops were falling back.
that's
Well,
exactly it. When the
we
troops retreat, the generals get slaughtered.
exactly. And so we could see from the breadth charts that we just looked at, which was the stocks above their 50-day, that we could see that here, we can just see it here with the S&P. This is evidence of the generals marching alone
Yeah, yeah,
because
it
we
is.
can see that these are the troops.
Yeah,
Troops are falling back. And
yeah,
look at what the market does. The market marches alone, but we know that the market is really the generals. The generals of today are,
yeah.
the Mag 7 and other big growth names, and
And one
that
general's gone down already, so that proves the point.
exactly. And so
Apple's a general that is,
it is the generalist general. It's the
badly.
5-star general.
Well, maybe Nvidia is now the
Yeah, maybe
general.
Nvidia is. I would agree with that. Yeah,
Okay. Okay. Well,
yeah.
anyway, it's great to be in the service with you and our army of uh, warrior guessers to
Exactly.
help prep people to attack something that is they try and complicate too much, including myself. Keep it simple. That's what I love about Wyckoff.
Just watch the tape.
Yeah,
The market will
I'm
tell us what it wants to do. Um, I'll leave you just with this. This is a little chart I did on interest rates, and this was the base that was made. This yet red arrow is when the Fed cut rates for the first time, 50 basis
yeah,
points,
yeah,
and then this is what the 10-year and the 30-year did. But
yeah.
they've now fulfilled these upward counts, and I think that higher rates may have ended for the moment anyway. I think we're going to build
Okay.
cause.
You don't have
That's it.
higher
I'll leave you.
counts. You don't have any higher counts than that.
No, that's
That
kind of
was
it.
it. Oh, okay.
Yeah,
That's a
and
big
so,
deal. That's a big
for,
deal. That point and figure counts have been fulfilled.
yeah, these yes,
That's one of the most important things you said, and you saved it for last.
and point and figure works really well on interest rates. So I
Okay.
love to look at that. So anyway,
Best place for people to, go and see you at wyckoffanalytics.com.
perfect. Come
And you
see
have
us. Yeah.
courses going and learn Wyckoff. And you
Mm-hmm.
know what? Guys that have been doing Wyckoff and stuff for 30, 40 years, take advantage. Like Bruce said, I'm not being morbid, but people that have been around in the business for 40 years, they're not young. I'm not young. So while you have people like this that have been through so many campaigns and wars in the markets to learn from, do it while they're here. All
Yeah.
right.
Yeah.
Really, I think it's important. You brought it up, one of your mentors, so you got to learn from him while he was here. So, if you see guys out there that are, boomers that have been in this since the 60s and 70s, you want to learn from them.
And
And
we try really hard to transfer that knowledge. With
yeah,
and we did it through teaching it for 30 years at GGU.
yeah,
And yeah,
it's like paying it forward, isn't it?
absolutely. And nothing makes me happier than to see our wonderful community just excelling and getting better and better. And
Okay.
you never stop learning either.
Okay, and here's our fight song for the year. Let's thrive in 25 and have a great decade this year.
That's why you're the coach.
All
It's
right,
like
ready?
those are words to live by.
I want you to declare it. Say it out loud. Everyone, we're going
Everyone.
to thrive in 25 and have a great decade this year.
Oh my God. A great decade this, and then take the rest of it off.
Yeah,
Go to the beach. Yeah.
yeah, yeah. For a
So
while, take a break. Anyway,
that's it.
all
All right.
right. All right, Bruce. Thanks so much, man, for
Thank you all.
uh,
Thank you,
ed
Dale. Thank you all.
educating our people here. I
Wonderful.
appreciate it. Bye-bye.
Take care, everyone.
All
Bye
right,
for
Bruce
now.
Fraser, follow him at RD Wyckoff on X and go to his website and learn what Bruce has to offer. It's classic, masterful stuff. So you're welcome, everyone. General Dale, yeah. See you, Marcus, Sinatra, all you guys. Tomorrow we'll wrap up the week. Adios.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.